welcome back to Sol Brothers, where it's our job to throw you into the Solana rabbit hole, show you around in our exciting ecosystem, and also talk to some special people on Sol. And today I am joined by DK from DFDV. DK, welcome to Sol Brothers.
Hey, thanks so much for having me.
Awesome. I've been looking forward to this conversation a little bit because obviously DATs are quite a big trend right now since the past couple of weeks, especially on Solana. And I think there's lots to unpack when it comes to digital asset treasuries, the strategy behind them, where they're heading, where they're going. We're going to talk about all that. We're going to talk a little bit about how do you set yourself apart as well in the DAT landscape, because there's been quite a few popping up these days. I don't even know. Do you have a number? Do you know how many Solana DATs we have right now?
Yeah, like somewhere around 6 or 7 in the US. It seems like everyone and their mother has launched one, as I like to say.
Here we go. And I think they're popping up in Asia as well. We had on our news section the other day, we had one from Japan, I think, that we featured as well. So there's things happening in all kinds of markets right now when it comes to DATs. And I'm personally really curious to learn, especially the strategy behind setting yourself apart. Because I don't know if it's going to be winner takes all in the DAT game, or if we're gonna have 20, 30 DATs that are covering one single crypto asset and they're all going to be successful. They have to have some distinct, features in them. So I'd love to kind of pick your brain on that topic. But what I also would like to do is to talk about Solana. And that's probably one of the first things we're going to do here today, is to talk about our dear asset SOL, because Sol is what we care most about as Sol Brothers, obviously. And it is always a great conversation to be had with people that are also bullish on Sol. Obviously, I like to get contrarian views. I don't know if we can get that from you, contrarian views that are contrarian with my perma-bull mindset on Sol. Maybe you have some views on that as well.
I don't know if it'll be a contrarian view, but it might be, I'm going to say, a little bit more out there and or distilled a bit differently, since we chat with Wall Street a lot.
Here we go. Yeah, I bet. So that's going to be an interesting conversation as well. But before we talk about all these things, I think it does make sense to learn a little bit about yourself, DK, because first of all, I don't know how you end up in this corner of the financial market, basically being the head of strategy. Is that correct, DK?
Yeah, most recently now Chief Strategy Officer, but I've spent most of my duration at DeFi Dev Corp as the head of investor relations.
I see. Okay, so in the past, head of investor relations, and now you kind of having that new title of chief strategy officer? Or
yeah, I mean, still doing all of the investor relations related activities. I think chief strategy officer title is more just getting me in front of folks, chatting with a lot of people.
That's why you're here. That's what made you join this interview. I see. Okay, so you must be one on the team that can talk very well.
I don't know if I would go that far, but I certainly have what did Parker call me? The chief talking officer. So
here we go. Yeah, I could be named that title as well. Honestly, I'm a master yapper. But I think, like, where do you come from in terms of your career? Because how did you end up at DFDV? Without going too far back, but I'm just curious to understand a little bit how do you end up in a digital asset treasury that has the sole purpose of acquiring Solana?
Yeah. So thanks for having me again. So I'm DK. I am Chief Strategy Officer at DeFi Dev Corp. We were actually the first Solana DAT in the United States, actually the first non-BTC DAT. And funny enough, we're, at least last I checked, as of last Friday, we're the #1 performing stock on the NASDAQ this year.
Really?
Yeah, and we were actually the #1 performing DAT stock, period, right? Like if you looked at our stock performance from the time we kicked off our treasury, we've actually outperformed MicroStrategy over the course of the last 5 years. We've outperformed BitMine, a bunch of other very key leading players. So feels good to be a first mover and sort of first leader in that regard. But as far as my background, I actually started as a DAT skeptic. So my previous gig before DeFi Dev Corp was I was the head of strategy at Kraken Crypto Exchange, where I was on the corporate strategy team for about 3 years. It's actually where I met the whole DFDV team. So Joseph Onorati, DFDV CEO, was chief strategy officer at Kraken. Parker White was director of engineering over at Kraken, where I worked with him on a number of projects. And Joseph and Parker pitched me on this MSTR plus MSTR 2.0 concept, but on Solana back in February. And I remember the call so distinctly because I hadn't really done that much work on MicroStrategy, but I had done the very surface level work of realizing that MicroStrategy traded at a premium to its underlying Bitcoin holdings. And I think, like many investors, just immediately dismissed it and said, it's a Ponzi. This sucks. This is all going to collapse and this makes no sense. So I remember getting onto that call. They were very excited to give me the pitch. And I immediately told them after the call, I said, no, thanks. This is a really dumb idea. And, I'm in a pretty good seat, so I think I'm okay. Fast forward 3 weeks, I get laid off from Kraken as part of rolling layoffs. And as it turns out, when you're unemployed and you have a family to feed, you're willing to do very dumb things. So I joined the company. I kind of tentatively said, hey, I'll help you guys out with your first fundraise. We'll see what happens. Let's see if I manage to get comfortable with how this business model works. And then magically 3 or 4 weeks later, we managed to raise $42 million in convertible debt. I turned from a DAT skeptic to a DAT enthusiast. And as I mentioned, we are the number one performing stock on the NASDAQ this year and best performing DAT since we've kicked off our Treasury strategy.
I have so many questions. What what would you say was the most important argument you had back when you were a critic again? Just to lay that out again, like what made you critical related to this whole idea of DATs back
Yeah,
then?
I mean, I think at the simplest level, my criticism was simply that I could go and buy Bitcoin on my own. And I considered myself to be, I don't know if I would go as far to say that I'm as well versed in crypto as someone like Joseph, right? Our CEO, who's been in the space since, the really earliest days. He was CEO of the first Canadian Bitcoin exchange, like employee number 23 at Kraken. He goes way back. And I got involved in crypto in 2017, but I'm certainly no slouch, right? So in my mind, I said, you know what, like I can go and buy this on my own. I know how self-custody works. I don't need a public equity wrapper like MicroStrategy to go and do this for me. And in my mind, it made no sense that I would go and pay. The analogy I give to TradFi investors is like, if I presented you a checking account that had 100 grand in it, would you be willing to pay 200 grand for that 100 grand checking account? Most people would probably say no, right? So in my mind, it just made more sense to go and buy Bitcoin on my own. But I think that was missing sort of like the greater value proposition of DATs and why that premium even existed in the first place.
Okay, while I still have a million other questions, let's just continue right there. So, to to what realization did you come after your initial concerns, and after then talking to Parker and taking a look at that, and what did you realize? What is the value proposition that now makes so much sense in your mind for everyone who still doesn't really know how that's, I think, work inherently?
Yeah, it took a lot of going back to bare bones basics, putting all of this stuff into an Excel spreadsheet and doing the modeling. And the conclusion that I eventually came to is that when you are purchasing a DAT, you are not buying the holdings today. You're actually buying whatever the holdings are going to be a month from now, 6 months from now, 12 months from now. You are paying for that vehicle to be a permanent, ongoing accumulation vehicle, right? So just the same way somebody would go and buy, let's say, shares in Meta today, they're not paying for the cash that exists on Meta's balance sheet. They're paying for future free cash flow. If you go and you buy Microsoft today, you're not buying the cash that exists on Microsoft's balance sheet today. You're buying future free cash flow. It's the same story with MicroStrategy. We've just historically in traditional finance not given MicroStrategy credit for its future Bitcoin accumulation the same way as we would give credit to a traditional equity and free cash flow, because they're not using like an underlying operating business to generate the cash flow, right? They're using this weird, perverse capital markets activity that kind of escapes a lot of people's minds to acquire more Bitcoin. And in my mind, I actually think that MicroStrategy's Bitcoin accumulation strategy does deserve a multiple or does deserve a free cash flow multiple, whatever you want to call it, the same way you would pay for a multiple in traditional equities. Now, why do I think that? Number one, most traditional equities are earning cash flow or earnings denominated in fiat, which, as we all know, is going to zero, right? And MicroStrategy is acquiring an asset that has grown at a 60% CAGR over the course of the last 5 years. So if you actually did the exercise to see what is the underlying earning stream that MicroStrategy trades at any given moment in time, peel back the MNAV, back out the software business, which is kind of worthless, back out the Bitcoin holdings, that underlying earning stream actually trades at, I don't know, less than 1x quote unquote earnings. You compare that with traditional equities like Meta, Microsoft, that all trade north of 20 times. And in my mind, it sort of seemed like a bargain that MicroStrategy, should actually trade at a higher MNAV premium, not a lower one. And then the chief critic sort of comes in and says, well, the reason why it trades at such a low multiple is because the argument is recursive. The MNAV exists because the market wants it to buy more Bitcoin, but it can only buy more Bitcoin because of the MNAV. And this is the beauty of doing this with a proof of stake asset like Solana, is that you can break free from the recursivity and build a real operating business around this like we have today.
I guess that is also what makes this so distinct to the Bitcoin DATs that we have out there, because they inherently can't do a lot of, let's say, native yield in the vehicle itself through the asset. They might explore some other options in TradFi markets to just leverage exposure. But what they can't do is produce cash flow, make revenue inside of the vehicle, which Solana is very well primed to do, I suppose. So that is, I guess, one point on the list for Sol as the asset inside of a DAT like this.
Correct. I think there's so many different ways you can get creative with the Treasury asset when you choose something like Solana, versus with Bitcoin. Really, the only way you can differentiate is to, one, try to be, I'm going to say, louder or more vocal than Michael Saylor, which is a tough proposition. Or two, you have to find, I'm going to say, some strange things to do on the capital market side, like maybe taking on more leverage, for example, to speed up your pace of Bitcoin accumulation. But that game largely feels won in the US by MicroStrategy. And in those early days, the way I described it to investors, I've used this metaphor a lot, but I think really describes how we felt about the competitive positioning, is if I handed you a football and asked you to run it down a football field, would you want an NFL lineman standing in front of you, or would you want the football field to be completely wide open? And as far as we were concerned, doing this with Solana meant the field was wide open, versus doing it with Bitcoin meant we'd have to go up against the NFL lineman that was Michael Saylor and MicroStrategy.
Okay. I think that does answer my next question to an extent, but I'll still set up that question with a little bit of background on DFDV itself, and then I'd still ask the question. So I just want to take a step back here and take a look at where does DFDV kind of came from, because it kind of appeared out of nowhere, right? And I think a lot of people don't know that, but there was actually a company before that, before DFDV kind of pivoted to being a Solana treasury. So there was a company called Janover Inc. And I think it was in a completely different business in the years before embracing Solana. But then in May 2025, if I'm not ill-informed, then this group of Kraken executives that is now, you're part of that, took over. And the rebranding happened to DFDV, or DeFi Development Corporations, and then this whole Sol-centric treasury policy was adopted. Since then, since May, you guys acquired a bunch of Sol in different times of the year. I think throughout that time, you became the largest public Sol holder. At least in July, I have that information that back then that was the case. And then also we have a lot of DFDV shops popping up in different jurisdictions. So obviously you said you're the first in the US, but there's also DFDV UK. There's also something going on in Korea. There's something going on in Japan. So it seems like you guys have also a strategy of not only being, the leader in US, but you also have these kind of other entities that are popping up to kind of break into other markets. And that's where we are now. Today, we're there where you said you're the best performing DAT out there. You fully embrace this Sol treasury model. You're breaking into other markets. But my core question here is still, when this was a brand new idea, why did you guys say we're going to be a Sol DAT? Because DFDV could be anything, right? It could. The purpose, I guess, it's to return money to shareholders and investors, right? So that's the core primitive, and make money. There must have been other opportunities. There's a lot of other crypto assets out there that you could do that same playbook with, especially ETH, I guess. So why not picking one of these assets, and why doing it with Sol and then full porting and doubling down completely on Sol? Like, what is the conviction behind that? And I know that you have your thoughts on that, and Parker is going to have thoughts on that, and everyone. But I think you can distill it down, and at least I'd like to hear your view on that.
Yeah, I'm going to give you the tagline here, which is, we think Sol is going to 50x from here. We have not given the exact time frame in which that's going to happen, but we think Sol is going to 50x from here. Now, I think when you are pursuing a digital asset treasury company, you need sort of a unique set of combinations when choosing your asset. The first we've spoken about already, which is the ability to choose an asset that is productive, that you can build a business around, the native yield component. We can dive into some of those elements a little bit later on. But to get to the heart of your question, there are two other elements that really matter to us a lot for the digital asset treasury. Number one is you need an asset, ironically, that is volatile. Why do you need volatility? Volatility is sort of the lifeblood of a digital asset treasury company. And I like to give the metaphor of, imagine you're pouring like raw fuel into an engine, right? In this case, the raw fuel is Solana, the engine is DFDV. And we take that raw fuel, we harness it, and we are able to provide different flavors of volatility across our capital structure to investors based off of their various preferences. Michael Saylor has spoken about this before as well, where he calls MicroStrategy a BTC refinery. And I like to think of ourselves almost as a Solana refinery. So for example, if you wanted, give or take, like anywhere from 50 to 100% X the volatility of Bitcoin, you might go and invest or trade around Solana. If you want Solana volatility on steroids, you might go and trade DFDV, because our volatility has historically been, call it roughly anywhere from 50 to 100% more than the volatility of Solana itself. Why? Because you're layering on management optionality. There's things we can do with the SOL. There's things that we can do with equity issuance, with debt issuance, that inherently enhances the volatility of SOL itself. Now, if you wanted something that was, I'm going to say, layered on with a little bit more, downside protection, and maybe a little bit of a safer bet or a safer output of this like really volatile asset SOL, you might be an investor that leans more towards convertible debt structures, or potentially in the future preferred equity structures, right? And I think the volatility element was important to have in any treasury asset as a result of all of these things we just spoke about. Now, you can't just go full on max vol, right? Because if we wanted to do that, we might just pick some random meme coin that has insane volatility, right? So what you also needed was, you needed really strong underlying fundamentals. And frankly, in our view, there is no other chain that has like the same level of fundamentals versus, I'm going to say, its market cap, like Solana does today, right? So if I look at whether it's number of active developers on the chain, whether I look at revenue on the chain, whether I look at the volume of like tokenized equities that are happening on the chain, all of that is up and to the right. And when you have that combination of really strong fundamentals with a market cap that is still like a fifth that of Ethereum's, in our mind, it made sense to choose the asset that had those really, really strong fundamentals, but still a lot of room for discovery, particularly from Wall Street.
That is very interesting. I do have to ask though, because you're talking about volatility, right? And I'm going to put you a little bit on the spot here, but what happens in the DFDV virtual offices on a random Friday when Sol tanks 20% in 2 hours? Like, what is there anything going on in the group chat? Like, are there any shareholders that are kind of, is the phone ringing? Like, what?
In the
How does
group
that
chat,
look
when
like?
Sol tanks, actually, the only thing we're talking about is how much of it we should really be buying at that point.
Okay, fair
Look,
point.
the beauty of this team is that in aggregate, we've got like actual decades of experience in crypto. As I mentioned, Joseph goes all the way back to 2013, Parker and myself like back to 2017. Our CFO, John Hahn, he had a Mt. Gox account. So that's all I'll say on that, right? Like, he goes way back as well. This is all to
Sorry
say
for that.
we have these scars developed over many, many years of operating in crypto, to know what it is that we're doing to
Okay.
structure our capital structure in a way that like means we're not going to blow up. So when we see Sol down by that magnitude, we,
Yeah.
um, for better
Fine.
or worse, are actually fairly calm.
Okay.
Particularly like
Actually, that makes sense.
this last weekend, I had a lot of people hit me up and say, "Oh my God, are you okay?" And like, we were like, "Yeah, we're generally pretty fine." I mean, we know there was a lot of pain out there that happened over the weekend. But again, when you're thoughtful with our cap structure the way we are, and you have to do things that aren't going to blow up the company in the event of a very severe drawdown, we sort of view those as big opportunities.
Yeah. I mean, I guess you guys can't get liquidated. Like, that's I think that is one thing. It's really difficult to blow up a DAT, really, like because you're
Well,
usually
you'd be
not.
surprised. There are still, we
Yeah.
talked about how like some companies will try to compete on leverage, right? So to the extent that there
Yep.
are companies that are taking out, let's say, margin loans, right, that could get called in the event of a major drawdown, like those could be problematic for some companies. All of the debt that we've done on the short term basis, for example, is all SOL denominated debt. So SOL could like drop 80% and we're still going to be fine. But I do think that like the skeletons tend to come out of the closet when you have drawdowns like this. And, again, a well-structured DAT can probably withstand it no problem.
Okay, I see. But then, I mean, I get the point that the team stays calm in these kind of environments, but don't you guys have a bunch of shareholders and stakeholders in DFDV that are not really familiar with this world where this kind of volatility just hits on a random Friday after market closed? Like, is that something of concern? Like, how do shareholders really react to this? And how do you have to talk back to Wall Street? Let me put it that way. And be like, and reassure
We chat with
them.
a fair number of, I'm going to say, shareholders on a daily basis, both retail and institutional. And I would say that my view on this is that over the last 6 months, we've done a really good job of getting our story out there and making sure that folks feel like we're very accessible. So when events like Friday happen, we'll get some messages in our inbox, both on over email and in our DMs on X. And I've always told people you should feel like you can hit us up whenever you want, when things are going really well, when SOL is completely collapsing, and we want to have that open dialogue with folks. And the interesting thing to me is that I think you would naturally assume that if Solana is cratering, that a DAT that is focused on Solana should necessarily crater, right? Because of the enhanced exposure. That's not always necessarily the case, right? There are some like additional factors that I think go into the day-to-day or hourly, call it price action of a DAT. But over the long term, if you think about a DAT's purpose, which is to acquire more of the underlying asset on a per share basis, right? I don't think it's necessarily just going to be this one-to-one correlation where the price is down and the price of the DAT's equity is down. I actually think as you accumulate more of the underlying, or if you were smart enough to, let's say, deploy on dips and things like that, and you're able to speed up your pace of accumulation, there's a natural offset that happens there. And you saw that happen with MicroStrategy as well, which is why MicroStrategy has outperformed Bitcoin pretty much like throughout all market cycles over the last 5 years.
Makes sense. Yeah. Okay. I talked, not me personally, but Eno, my co-host, talked to another dad a couple of weeks back, which was STSS Sol, and
Oh, cool.
these gentlemen are also fairly active. I guess you guys are acquainted somehow. You know each other, or at least you have some overlaps here and there. But I was pretty astonished by by their company goal of acquiring 5% of Sol, which is fairly big chunk. Obviously, they have some way to go there, and there needs to be some North Star and some vision. Does DFDV have some sort of internal goal that is similar set to this when it comes to, okay, how much are we actually intending to acquire in this asset?
Yeah, it's a good question. So we have not come out and given an explicit percent of the network target. I know a lot of people really like the 5% number. I think Tom Lee has certainly made the alchemy of 5%, right? This popular phrase over the course of the last few months. Folks could probably naturally back into what percent we are targeting based off of the guidance we have given. So we have guided to our company's North Star key metrics, SOL per share, both in the short term and the long term. So if you looked at our SOL per share today, we're at roughly like 0.08, give or take. And we have guided to 0.165 SOL per share by June of next year. We update that guidance quarterly, so I won't comment on it, currently, but that is the number that we gave at our most recent earnings call. And we've also guided to a long-term target of, call it 1 SOL per share by December 2028. So why do we give these SOL per share targets? We want folks, well, I think it's a couple of things. One, you need to be focused on Solana accumulation on a per share basis, right? You can grow the absolute amount of SOL on your balance sheet to some really large number, but if your dilution is either on pace or outpacing your SOL acquisition, then you can actually be doing something that's detrimental to shareholders. And two, we want folks knowing that we are just like hyper focused on this one North Star. In some ways, one of the best propositions you can have as a DAT is having a very simple story that folks can get behind. So folks know that we think Solana is going to 50x at some point. Again, we haven't given a time frame, but they know that we're acquiring an asset that is, in our view, going to 50x, and they know that our SOL per share, or at least our goal for SOL per share, is to grow it pretty rapidly, both in the short and I'm going to call it medium term. Based off of those targets, you might be able to roughly back into what percentage of the network that that we have. We may get more explicit with that in the future, but TBD.
Okay, that makes sense. And I think a few people might not really get that idea of getting a leveraged exposure to Sol via that, which is essentially that as well, right? Because the numbers kind of back that whole argument. Because if you have right now 0.6, what was it, 0.65 Sol per share, and you want to crank it up to 1 Sol per share, and at the same time horizon, Sol itself makes a 10x or something, then you're not only getting the 10x from the Sol, but you're also getting the increased Sol per share from the DAT. So you actually do have a leveraged exposure on the asset. Is that correct?
I stay away from the term leveraged exposure personally. I get why people use it, but I think leverage inherently implies that you're just relying entirely on debt to do something there, when that's not necessarily the case. So I usually use the term enhanced exposure. And again, I think this gets at the underlying, I'm going to say, value proposition for DATs in the first place. So I'll give two examples here. One's a metaphor, one is just concrete historical data. If you look at MicroStrategy over the course of the last 5 years, the reason they've outperformed Bitcoin by over 2x, which is astonishing performance, right? But the reason they've outperformed Bitcoin by over 2x is because the underlying BTC per share has actually gone up 5x over the course of the last 5 years, right? So you're not only getting the benefit of the price action from Bitcoin, but you're actually getting more native like Bitcoin units per share of MicroStrategy, which again is the ultimate value proposition of a DAT in the first place. And the metaphor that I give to traditional finance investors to help them understand this dynamic is you can think of buying spot or buying an ETF as sort of sitting on a life raft on a river. The river's the price action, and wherever it takes you, you're going to go, whether that goes up or down. That's all that you're getting. Versus if you buy a DAT, it's like getting onto a speedboat on the river. It gets you to your destination much, much faster. You get the benefit of the price action, but you can accelerate if you need to. You can slow down if you need to. You can steer if you need to. And, an investor's job, quite frankly, is to choose the fastest boat, and the fastest boat that's not going to sink and actually being steered by a management team that has operated these sort of speedboats before. But I think that intuitively illustrates to folks the differences between buying spot and buying a DAT, and also helps folks understand what the ultimate value proposition is, which is just faster accumulation of the underlying.
You know what? When I listen to that, DK, since I worked a long time ago in financial services for pre-crypto with normal TradFi stuff, and I almost think of kind of index funds, which are a little bit stupid and algorithmic, and they just do their thing, they just float away, versus actively managed funds, right? That are usually have a management team, they have a C-level, they have people working there, they have analysts, they have a whole department with one job, which is make sure that the assets grow. But they also have a premium for their service, while the index funds are a little bit cheaper. But it feels to me almost like the DATs are the actively managed funds of crypto now, with the difference that they just require one thing, which is Sol in this case, and not a niche or not a vertical or whatever they usually do in actively managed stock funds. And then we still do have ETFs as well coming, right? So is that something you guys will be competing with? Is that on the landscape? Because the ETF is coming, we know that, and it's going to attract a bit of liquidity as well. So are you competing with spot ETF or are you just competing with one of
I
them,
don't
or how would you?
necessarily view them actually as competitive products. I actually view them as fundamentally different products. Again, we talked about a little bit earlier on the podcast about different flavors of volatility that a DAT can offer. And I think that's just something that you're not going to get with an ETF. For example, when the BTC ETFs hit the market, like MicroStrategy's options open interest exploded, right? And again, I think this speaks a little bit to the volatility capture and the ability to attract convertible arbitrage traders, options traders, all the BTC maxis to their cap structure. In the same way, we're hoping that we can attract all of those same, like, I'm going to say, volatility junkies, all the folks who like monetizing volatility, even when the SOL ETFs come to market. And if anything, we sort of view the SOL ETFs as just a ultimate net positive to Solana itself, right? Capturing more inflows and bringing more attention to the space from mainstream investors, which will just allow us to execute on our playbook much more efficiently.
Yeah, yeah. Okay, well played, well said. That makes sense. I understand that. Now, looking a little bit forward, you mentioned this big 50x on Sol, obviously, which that kind of sticks, right? So once you said that, I was like, okay, we kind of need to talk about this. How do you sell Sol to Wall Street with that kind of narrative? I don't know if you tell them this is a 50x asset. I don't know if you use that lingo with them, but
I've been using it a lot recently, actually, and then
oh
it
hell,
sort of
hell
like
yeah,
turns heads immediately, and they go, "What? How are you getting
exactly.
that?" Right?
Exactly. That's what I imagine. Like, there's a lot of question marks in the room. There's a lot of doubt in the room as well. Oh, you're talking about crypto. You're talking about 50x. Okay. I don't know if I want to be affiliated with that. So, I mean, you're obviously as the investor relations guy. You did that a lot in the past, and you still do it today, I believe. You are the person who has a lot of these conversations, I suppose. So, what's the pitch really? I hear the pitch from a lot of people, and I'm always really curious about it. I'm still refining my own pitch. How do you pitch Sol, not just DFDV, but Sol the asset, to Wall Street?
Yeah. I'll tell you my pitch today. I'll tell you the pitch as it used to be and why we had to pivot to the pitch that we have today. The
Awesome.
pitch today is pretty simple, which is just that Solana is cheap, it's fast, it is highly scalable, and anyone can access it. Anyone with an internet connection can access it. And when I frame it from those four vectors, right, those are things that are going to, I'm going to say, like, stay constant over time, and or these are things that people will want constantly over time, right? Nobody ever said, I want to pay more transaction fees. Nobody ever said, I want my transaction to process much slower, right? So when you can frame it in I'm going to say really simplistic terms that someone who's, let's say, less familiar with crypto can just understand, then it's like a little bit more tangible for them, and you can start to peel back the onion a bit more, go into the metrics and things like that. But the first pitch I actually ever gave on Solana back in the, like, I'm going to say, pre-convertible debt days, before we did the change of control or anything, was I remember getting on a call, and this was after I had sort of converted from a DAT skeptic to a DAT bull, and I was learning how to pitch this. And I get on a call with a fund, and I'm like, Solana is the most performant L1 out there. It's the only one that has all the, I'm going to say, like, the speed and cost profile to build like real apps on. It's internet capital markets, which we've all, heard that phrase a million times before. You can run validators. In our case, we plan to run our own validators. You can stake your treasury to your validators and earn all this yield. And it's really awesome. It was something like that, right? And then I remember I gave that pitch, and the person was like, so let's take a step back here. What's an L1? And I was like, oh, okay, we've got to go back even further. Another question I got was like, what's a validator? What is
Oof,
staking? How does it work?
you
Yeah.
don't want to get
And
into these.
what I realized very early on is that you have to actually meet investors where they are on their level of understanding. And it is actually surprisingly still extremely early in terms of like mainstream understanding of what Solana actually is. And I think the big problem we sort of have in crypto land, myself included, right, is that we're all very guilty of like really wanting to dive into the infrastructure and how it works. And, I remember trying to chat with someone about how awesome Alpenglow is going to be, and like what multiple concurrent leaders are going to do for Solana, like all these things that most people just don't really care about. The only thing that Wall Street investors care about is the outcome. And imagine if, like, you went to go pitch a Wall Street investor on Netflix, for example, right? Back in the 90s. And instead of just giving the simple message like, hey, you'll be able to watch TV on the internet from your computer or your phone, you went and you started talking about like what's happening on the back end and how, stuff is going to connect to AWS and it's all going to go through all these different fiber optic cables that are undersea. You would have lost the plot almost immediately, right? So the pitch that I give is very like these days, just simple, grounded in Solana's infrastructure. It is fast, it is cheap, you can scale it really well, and anyone can access it. And then again, we can go into all of the details, and of course the price target itself.
I think that's the bait, right? You just have to back it with something. You cannot just throw that out there and be like, "Yep,
Right.
it is what it is. Solar's going to go to $1,000. Just give it some time."
10,000.
10,000. I mean, okay. You actually, is that the target? Is that actually the
That is
prediction?
our target. We haven't said again when, but that is our target.
Wait a second. That what? Are we like on gold market cap levels then, or what?
Yeah,
Like,
so there's a few different ways you could look at it. Actually, the way we like to look at this is if you looked at all of global value transfer. And then again, I think this speaks a little bit to meeting Wall Street where they are, because if I use the phrase internet capital markets, I actually think it does us a little bit of a disservice when we're pitching to Wall Street. Number one, it's a little bit, if you're outside of crypto, it's a little bit of this ambiguous, like sounds cool, but I don't really know what it means. But two, it gets investors really focused on just the capital markets component of the story. And we actually think that Solana is just going to underpin much more than capital markets activity. We think it's going to underpin all of global value transfer. What does that mean? Monetization of live streaming, monetization of AI agents, maybe carrying out transactions, agentic commerce, monetization of in-game content in video games, right? And if you looked at all of global value transfer last year, according to McKinsey, there was roughly 1.8 quadrillion of global value transfer that happened last year.
no idea
That,
what that means, but okay.
yeah, that revenue pool, right? So if you just looked at the revenue pool of that, was somewhere around $2.4 trillion of open like revenue
Okay.
that is up for the taking. So when we look at our 10K Solana price target, we simply assume some high single digit, call it like penetration or market capture of that $2.4 trillion revenue pool. And then we assign a 30x multiple to that capture. And you say, okay, 30x is an aggressive multiple. It's actually not that aggressive compared to a lot of the multiples that you see in big tech today, number one. And number
Yeah.
two, it is certainly not an aggressive multiple compared to where Solana has traded on a, call it like a revenue multiple basis today based off the fees it generates and its market cap, right? I think it's somewhere on average around like 80x, right? So we're assuming the multiple naturally comes down as the Solana network goes to a more mature state. But 30x still feels like reasonable. And again, high single digit percent multiple market share capture. And based off of those two elements, we arrive at a $10,000 SOL USD price target.
Damn, it's not just a number. I just realized you guys actually thought about this.
We did
It's
give it some thought, yeah.
no, obviously you did, but yeah, you hear a lot of these crazy price targets throwing around from people that actually have no idea what they're talking about. But obviously, you guys actually have a really good. I love the whole narrative of basically capturing global value transfer and doing this all on chain on Solana, which taps perfectly into internet capital markets. It perfectly taps into real world assets and basically the tokenization of everything. It taps perfectly into the narrative of a lot of the DeFi founders on Solana these days that say we want to get all liquidity on chain, like of everything that moves in the world. Like that is the vision. That's where we want to go. So it encapsulates all of that in one
Yeah, and
simple pitch.
the crazy part is that if you actually let's assume for a second we manage to hit that 50x, right? You get sold at 10K. You consider the market cap at that level, and it's actually still like less than 1% of all traditional asset classes combined, right? So Sol at 10K is what, like 5 trillion market cap, something like that. Like gold is at 27 trillion. Corporate bonds are at 35 trillion. Global debt is like somewhere around 300 trillion plus. This other value I get is sort of a meme, but like the notional value of global derivatives, 700 trillion, right? There's a lot out there for the taking. So I know it seems like kind of inherently crazy when someone goes and says, oh, Solana's going to 50x from here. But I don't know. I know folks would have also called us crazy if we said Solana was going to 25 or 30x post FTX. And look, here we are.
For sure. Yeah. And now we have a much more credible story to tell, honestly, based on much more fundamentals than back then. Back then, it
Correct.
was still very speculative. Right now, and I always say this, and I thought I'm bullish, by the way, but Dan, I think you're, I think you're more bullish than me. But what I usually say when people ask me, okay, how can you be so bullish on Solana? I'm like, there's too much stake in this ecosystem. Like, there's
Yeah.
too many people with their lives involved in this ecosystem that this could even attempt to fail. And
Yeah.
it didn't fail back then. And back then we had much less stake. And when I say stake, I literally mean people's lives. Like, they care so much about this. They have companies here, they make their money here, they have their investments here, they have all the chips on the table. And we have people like yourselves nowadays that are working for companies with the sole goal of acquiring Sol.
Soul goal. I like that. Yeah, look,
What
and
else do you want?
again, we sort of give this framing, and then when people ask about maybe some of the particulars, they're like, all right, give me some proof points. And I don't know, a proof point I like to give, you've probably heard the all summer stablecoins are the chat GPT of crypto, right? Again, we can thank Tom Lee for that one. And what I've told folks is like, if stablecoins are the chat GPT of crypto, then Solana's NVIDIA, right? And you can actually just look at the stablecoin TVL on Solana as a proof point for that. So if you were to rewind the clock 5 years, I get super like nascent days here, but you're like at somewhere in the tens of millions of stablecoin TVL on Solana. I think it got to like 3 billion in like late 21. It's grown to like 15 trillion today, right? That's a 250% CAGR over the course of the last 5 years. It's like very clearly been the number one share gainer over the course of the last 5 years. You can even look at DEX volume, right? I think like we peaked somewhere around like 40% market share for Solana in Q1 of this year in terms of DEX volume market share. But it's somewhere around the magnitude of like 8 to 10x in terms of like market share percentage gain over the course of the last few years. So all the trends are up and to the right. And when you have that kind of like really powerful story of strong underlying fundamentals, the proof points are all there, the tech is there. I mean, this weekend was like, in my mind, just another proof point for
Oh,
the
yeah.
throughput and the ability for the chain to really handle a high
Yeah.
number of transactions, and it withheld the stress test incredibly well. Like
Mm.
it's almost a gift to be able to get it at this market cap.
100%. And I actually, I think that describes a little bit also a time in the market, because when Sol drops 20% right now, everyone is like, oh, great, the chain survives and everything is still working and nothing is breaking and we can buy in cheap. Everyone is like, like everyone is positive. So
Yeah, yeah, yeah.
it kind of describes, it does describe a moment in the market. It's not a top signal yet, guys, don't worry. But but it is cautiously bullish. Let me put it that way.
It was also like, I mean, uh, hats off to our research and content guy, Pete Humiston, who put this chart together for us over the weekend. But when you look at the average transaction fees on the network, I think Solana tops somewhere around like 25 cents. That's like at peak, right?
Yeah.
And then it returned right to sub 1 cent, right? Ethereum was like, I saw
It
that the
was
tweet that was going out about like $1,500. I think the average transaction fee was somewhere close to like, peaked around $600 and then went back down. But like it,
insane.
to me, just the difference is night and day.
Hell yeah. I mean, you cannot work with that. Like, literally, you cannot.
No, you can't.
Like, you can. Like, that's why you need L2s, and that's a whole different kind of
Yeah, yeah,
beast
yeah.
to work with. But yeah, I think I get the point. And again, Dan, I think you're the perfect man for your job description, because you're really good at unpacking the narrative, telling us about why Sol, the bull case for Sol. But one last thing I want to double tap on this pod as well with you
Yeah.
is the whole DAT story versus other DATs. So there's, like you said initially, that we have 6-7 DATs on the market right now. It's quite a new vehicle. It hasn't
Yeah.
been around before, so it's really unclear to me and to a lot of people how this is going to play out in terms of the competitive landscape and market in the next couple of years. And I'd like to get your take on that and see what are you guys trying to do to set yourself apart? How did you even reach your position at being the top performing DAT? Like, I'd love to hear a little bit about how that actually works. Like, what are you guys
Yeah.
doing that the others are not doing? As much as you can say, of course.
Yeah.
But then also, how is this going to look like in the long run? Like, is there going to be just DFDV, obviously, because that's going to be the winner takes it all, or are there going to be other players that are just distinct to some extent?
Yeah, it's a good question. So there's two angles of differentiation, I would say, or two ways to look at it. One is um, choose the right asset, right? So we spent a lot of time just now talking about the difference between a SOL DAT versus a BTC DAT, or versus choosing maybe like Ethereum for your treasury. And then there's, I think, the heart of your question right here, which is how do you differentiate among all the other SOL DATs that are out there? And I tell people three different elements for us: faster, better, relentless. So we'll go into each of those. Faster means faster execution. Now, faster execution means, in our case, we were the first non-BTC DAT to launch in the United States. We were the first DAT in the US to actually own our own validator infrastructure. We're the first DAT to deploy our treasury on chain, first non-BTC DAT to file for a preferred equity offering, first DAT to tokenize our equity with X stocks. Like, being a first mover really matters. And I think the fact that we were the first mover is probably a large contributing factor into our stock performance, over the course of the year. So that's faster. And of course, faster execution also means that you're able to experiment, see what works, see what doesn't work, take those learnings. And as I like to say, we've certainly learned a lot over the course of the last 6 months executing our treasury strategy. So that's one element. The second one I would say is, faster, better. There's better yield, right? So you can think of Solana DATs as having, I'm going to say, like, various tiers of yield, right? So we already spoke about how BTC DATs have no yield. SOL DATs can obviously generate yield. So you can start to stack rank them based on their level of yield. Let's say tier 0 would be a DAT that buys SOL and does nothing with it, right? That's obviously terrible value proposition. I don't think anyone in the market is doing that today. Tier 0.1 might be a DAT that buys SOL and then stakes it on Coinbase, but then does nothing else. They don't deploy their treasury on chain. They don't own their own infrastructure. So you're paying costs to a third-party provider. You're still not really like optimizing your yield. And in my opinion, that's not substantially better than an ETF, which in my view, more or less sets the risk-free rate, right? With the ability to stake. So from there, things start to get more interesting, right? Tier 1 after that might be like a DAT that owns their own validator infrastructure, right? So you can get third-party delegated stake. You can obviously stake your own treasury without paying costs to a third-party provider. And in our case, we generate roughly 20 to 30% higher average block rewards. So now, not only are you not paying out the costs to some other staking provider, but you are actually in our case, generating higher than industry average yields. And then I would say there's the next level up, which is really what matters, which is running your own infrastructure and deploying your treasury on chain to enhance your yield, right? And that's, I think, like, kind of the heart of what it is that we're doing to differentiate. Approximately 10% of our treasury is deployed on chain today. As I mentioned, we were the first Solana DAT to deploy our treasury on chain. And I think it does a few things. It's yield enhancing, of course, and we've guided to roughly 10% average organic yield across all the activity that we do across our businesses. But really, it allows us to control our own destiny, because if we can support on-chain projects, help the ecosystem thrive, then Solana will thrive. And of course, we will thrive. We can deploy more of the treasure on-chain, right? It becomes this really positive, virtuous cycle. So again, we've guided to about 10% average organic yield, give or take, across our entire business, inclusive of all the activity that we do. And we do plan to update this guidance on a quarterly basis. So long-winded answer, but here we are. Faster execution, better yield. What was the last one? Relentless. So
Great.
we have a relentless obsession with shareholders. Marketing has been a key strength of ours. Everything from our social media presence to the transparency of the metrics on our website, to our presence at conferences, to the merchandise that we have. And I mentioned this earlier, but one of the things I really love is that this management team is really accessible and really deeply cares about shareholders. So our incentives are not tied to just market cap or AUM growth or things like that, right? Like our payouts, our bonus structures are tied to SOL per share growth, because we want to grow the underlying Solana exposure on a per share basis for each individual shareholder. And I highly encourage shareholders to tweet at us, reach out over email. I do love just how accessible we are and that we communicate with shareholders on a constant basis. I mean, I think we literally respond to everyone minus people who like spam us or threaten us. But you know, we do care deeply that our shareholders feel like they're along for the ride. And one early example I can give, it feels minor, but it went a long way apparently, was we had someone ask us for a view of like SOL per share over time on a graph. And our engineer spun it up in a day and threw it on our site. And that, in my mind, is true shareholder obsession. You know, we don't carry out every single suggestion that comes our way, but we do listen to every single one who supports us and every single one who wants to communicate with us.
Cool. Okay. I think that makes it pretty clear. So first mover advantage, which you guys have in several verticals by now. You guys are optimizing for yield. And I have a question for that. And you are relentless when it comes to stakeholder communication and getting back to requests and so on.
Yeah.
To the yield, you say 10% of your holdings go on chain to seek yield in the DeFi ecosystem on Solana. Without, you don't have to necessarily name or point out any protocols here, but what kind of things do you do on chain to generate yield? Is it like lending and borrowing, or you're parking your assets in yield generating stables, or what do you guys do?
Yeah, yield generating stables is one element to it. Actually, one of the more interesting things that we do that we've spoken about publicly before is we do have a liquid staking token, DFDV Sol, issued by Sanctum. And one of the things we can do with our Treasury is mint DFDV Sol, right? And then we can use we can basically go and borrow Sol against DFDV Sol on, let's say, Camino, for example, and you know, don't quote me on these figures as of today, but like, let's just illustrate this. For example, let's say we borrow on Camino at like 6 or 7%. We can then take the SOL that we borrow and stake it to our own validator. So run like a loop staking strategy, for example. And the net interest margin that we're able to generate on something like that is, call it in the order of 100 to 200 basis points, right? But all you need, again, for this game of like differentiating on yield is a couple 100, 200 basis points for that to really make a difference over the long term, particularly as your treasury strategy gets much, much bigger. So that's one example of something that we're doing on chain today to generate some additional yield. You highlighted yields on stables. Don't have anything concrete to share on that today, and we don't want to give away the whole playbook. But the beauty of DATs, for what it's worth, is that by virtue of having to report earnings on a quarterly basis and file 10Qs and be as transparent as possible for the sake of gaining shareholder trust, you can more or less, like, if you were clever, like, see how it is that we're deploying our treasury. And we plan to, get into more details on that later on, but we also don't want to give away the entire playbook here.
That makes sense. No, I appreciate the transparency. Actually, you are quite transparent when it comes to how you guys are managing DFDV and your SOL, and I find it fascinating. And while you were talking, I thought of one another thing for everyone who's still doubting why we need blockchain and crypto right now. I think it's actually really beautiful to see a Nasdaq listed company that is literally a treasury company. Sounds really kind of TradFi-ish and really exclusive and private, kind of whatever they do, right? But these guys are literally using the same yield-seeking opportunities on chain on Solana than you. Like if you're a retail user, if I want to deploy my money, I do the same shit. Like I'll also open up I'll buy some LFTs, I borrow against it. I do the same thing than you guys. I don't have.
We were joking internally the other day, man. It all goes back to on-chain like degen yield farming. I mean, one of the things, I don't know if you can see this on my. No, you probably can't. If you look at our logo is literally a bridge. Like we set that very deliberately from day one. And the reason why we have it as a bridge is because we wanted DeFi Development Corp to be the bridge between TradFi and DeFi. And what we've said is bringing TradFi capital into DeFi and DeFi returns and innovation into TradFi. And it's a very simple explanation, but like by carrying out the MicroStrategy playbook, we bring TradFi capital onto our treasury. We have the Solana that we can then deploy on chain. That on-chain deployment allows us to generate some component of organic yield. And that organic yield allows us to grow our Solana on a per share basis, which directly flows back to our common equity holders, right? It is literally the connective tissue between TradFi and DeFi. And I think it's sort of like a powerful view of what we hope this company is going to just evolve more into over time.
one more fun fact, and it might be minusculous right now in terms of its scope, but basically what you're doing as well with the strategy is you're deploying capital on chain, right? Right now it's just 10%. Let's see in the future it might be more than that. Question mark. Let's see where it goes, but it might be more than that, or the 10% just grows in value, right? The more SOL you guys acquire. All I'm saying is that money flows into protocols that are on Solana, that are making revenue, that are boosting the Solana ecosystem again. So you're basically reinvesting in the city that you're owning a part of, right?
Yep.
In the shops in that city. You're reinvesting in there, you're parking your money there, you're shopping in those shops, you're giving them money. They're thriving on that, right? If all the DATs are doing this, it's going to pump all our bags.
That's a good
So
metaphor. I'm going to use that when I talk to our investors next.
here
I
you
like
go.
that.
Here you go. You're welcome. But actually, I love that, right? It all makes a lot of sense. So yeah, really bullish on Sol, and I think it's honestly, it has been a great conversation already until here, and we're wrapping it up now as we're coming close to an hour. I have one last question for you, DK.
Yeah.
That is related to your guys' staking activities on Solana, because I find it actually really interesting that you guys are running your own validator. You have your own sanctum issued LST that you're using in DeFi and so on. Have you ever considered deploying some of your SOL holdings not only to the DFDV validator, but also having some sort of delegation pool? Because I don't know if you know, but it's a thing on Solana that there's a few delegation pools, right, that are allocating to smaller validators from the ecosystem. Because you're still making a yield, right, on your SOL.
Yeah.
And at the same time, you might be actually supporting some of the companies that you are hoping to see thriving in the next couple of years to generate in return again more business in the city, right? So I think you got the question.
Yeah. Look, it is certainly something we're a fairly open-minded team. So this is not a no, all the SOL has to be staked to our own validators. In fact, like we've there is a portion of our treasury by virtue of it being locked Solana that actually is not deployed directly onto our validators. And as that comes unlocked, we deploy some of it to our validators, but TBD where it is, we may decide to allocate in the future. We also run a couple of joint validators with Bonk and WIF. So we spun a couple of those up as well, right? It's not all just like concentrated and locked up in one spot, although we obviously do like putting as much there as we can. And TBD, what else we support in the future.
Cool. No, I love that. I love that open-mindedness. And I think there's a lot of actually exciting opportunities, like me running my own validator for a company that I lead as well. I know how it feels like to be a small validator on Solana that is seeking, SOL. And we're very open to any kinds of deals and strategies, to get more Solana on these smaller validators that might not be able yet to pull off, 100, 200K SOL stake themselves. But if they would have 100K stake, they could cover 30% of their monthly expenses, operational costs for their company, which will, give them another 2 years runway. So it can make a huge difference for some of these smaller companies to get some SOL from these delegation pools, right? So I'm really grateful that we have them on Solana already, but we need more. So that's why I'm
for sure. And look, it's a conversation we've had internally as well about, particularly in the bear market, for example, how is it that we're going to support maybe some earlier stage projects? And, TBD, we have nothing to say on it today, but again, to the extent that the ecosystem thrives, we will thrive. So it is certainly something we're paying active attention to.
I love that. Dan, I'm going to let you go into the rest of your Monday. I suppose it is still morning time for you, or at least early in the day. So thank you for hopping on here. It was really good conversation. And if you guys enjoyed the conversation with DK from DFDV, then please make sure that you also follow DFDV on X, because I think that is probably the best place to at least catch the folks from DFDV. Maybe also slide in the DMs if you have any requests. As you heard from DK himself, they are very open. But at least give them a follow, show some support. And preach the Solana gospel as well as Dan is doing it to the folks in TradFi, to all of your friends. So with that being said, Dan, thank you so much for jumping on Soul Brothers, and for everyone who's listening, thanks for tuning in to Soul Brothers, and we'll see you at the next one.
Thank you so much for having me.